Hi everybody, it's me, Gregory Mannarino, and welcome to this segment of Trade Game. Today, I'm going to cover some strategies with regard to options trading. Now, we're not talking about 50 Shades of Grey when I'm speaking about straddles and strangles. So get your mind out of the gutter for just a little bit here. We're simply talking about ways to position yourself to gain an edge on this market. Basically, in my previous videos where I've talked about options trading, I have outlined some basic concepts which are very, very important. And they are the backbone, literally, of this game, trading options. Now, we're going to move on to, again, straddles and strangles here. I am more than certain, if you've gotten through my previous videos, you've heard of these terms before. And we're kind of confused about them. They're very, very simple. Again, when we're talking about options trading, we're always looking to get an advantage on the market. Now, these two particular strategies are interesting, and you play them when you expect there to be a large move with regard to the underlying stock. Again, we're not trading stocks, we're trading the derivative or the option. So let's talk about a straddle first. Okay, straddle. What that means is you are taking up two positions. You're taking up a call and a put simultaneously on the same option with the same strike price and the same expiration date. Now, why would you be looking to do that? Interesting concept. Again, you're looking for a large move in the underlying stock. Generally, someone will take up a straddle if they believe, let's say, for example, earnings are coming out, but they're not really sure how the underlying stock is going to respond. You might want to look at a straddle here. And there are many different ways to play this, and we'll talk more about that when I finish with a strangle. So, a straddle, very simply, is taking up two positions on the same equity. A long position or a call, a short position or a put. Again, same underlying stock, same strike price, same expiration date. Okay, now, strangle, a strangle. Okay, strangle. Pretty much the same concept, except you're taking up positions, an out of the money position on both ends here. Okay, for example, let's just say the underlying equity is trading at 50 bucks. You got it? You might be looking at a call position at 55 and a put at 45. Basically, you're looking at a band here. You're hoping that the underlying equity will fall outside of one of these bands here. You understand? So again, this is a strangle is a position that you'd want to take up if you're not really sure of the direction of the underlying equity, but you're looking to capitalize on large moves here. You understand? So again, these strategies here are for the investor that is willing to take a loss on one end, but a larger win on the opposite side. So the average will be a net gain. You understand? Now, people are going to play these things in different kinds of ways here. Me, for example, I will engage in these from time to time, but I'm looking at it from the perspective of I'm not going to be holding this till expiration. I rarely, in fact, almost never will hold a position until expiration. If I'm thinking an underlying asset is going to be moving in one direction or the other, because it's very difficult to get in on the very, very best price. There's always going to be some fluctuation here. So let's say, for example, you decide to enter a strangle on stock XYZ or a straddle, whatever, on stock XYZ. You have a finite amount of funds to put into this trade here. Again, you're taking up both sides of that trade. You can capitalize on movement one way or the other, close those positions when you feel We're about to make a turnaround, whether if you're going long or short, and you can allocate those funds into one side of the trade. I hope that doesn't sound too complicated for you. If it does, just please watch this video again. So with that said, these are just two basic strategies that an investor or a trader would be looking to enter if you believe there's going to be a large move in the underlying stock in one direction or the other, but you're not sure which way it will go. Anyway, I hope this has been enlightening for you. And if you believe that is true, share this. Let's get more people to understand really how simple it is to trade options. With that said, I will see you next time. Take it easy.